Hey, what's going on, everybody? I am here solo for Financial Fitness Friday. And what I want to cover today is a question that I see in groups, always asked, and it's how can I start up a business? How can I get the money to start up a business and do it the right way? So I want to kind of break down each avenue and give you guys the pros and the cons. Okay. So the first way people can do this, right, is save up. And the pro is obviously that's going to be the cheapest way to do it because you're saving and you're not borrowing to do it and you're not taking on outside money. And the pro, again, it's cheap. The challenge with that is that it's going to take you a lot longer and you could miss out on opportunities and market share. Plus, if you do it that way and you run out of money, it's kind of a challenging situation, right? So that's the good side, the bad side of doing it yourself. Next, friends and family. Friends and family is something that I definitely steer people clear of. And the good news is, hey, if it works, you pay everybody back, you look like a hero. The challenge with that is if everything goes sideways, now holidays are awkward. Okay, you lose friends. I personally would tell you to stay away from the friends and family route. Friends and family usually leads to a lot of headaches. And those headaches can come even if things are doing well, right? So let's look on the positive side of things. If you build a business and it's doing 7, 8 figures, now people will think that are close to you that they have a say in the business or they want a bigger piece or an equity stake. I would steer clear of friends and family because on the positive side, it can still be dicey, still be hairy. On a negative side, it can be detrimental to all your relationships that are closest to you. Right. The next one is investors. Investors, if you were to go out and raise money, which you can, the money may or may not be cheaper. Depends on if you do it through debt or equity. What I mean by debt is you're just paying them back with a set percentage rate or interest rate, or are you giving up equity? Right. And if you're giving up equity, you have to understand that when that company is successful, that equity is always going to cost you a lot more because well, even if you build, let's say, $1 million business with 20% margins, that's $200,000 a year. And if you gave up, let's say, 40% equity, you're giving up $80,000 a year. And that's for the life of it, unless you buy them out. So I would be very, very cautious on that. The next way to do this is partnering with somebody. And I will say partnering with somebody can work out. It can be great, and it could also be an absolute nightmare. The first thing is if it works when you're looking for a partner, don't just look for a partner that has cash. All right. Cash comes and goes. You can always get a loan. The challenge is when somebody is just putting cash into a business and they do not bring any additional benefits, it really can be frustrating. All right. Now, let's get past that. Okay. If you're partnering with somebody and you should partner with someone that has a different skill set, the skill set where maybe you're lacking. So for me, I'm good with sales, relationships, strategy. I'm not what you would say an integrator. Okay. And I'm not good with marketing. So in the past, I would have looked for somebody that has strong marketing skills and can be the integrator to one of my companies. Okay. If you can make that type of partnership, that's great. Most of my mistakes have come from partnerships. Just being honest, open. Most of my mistakes, I've had two really big setbacks, actually three really big setbacks in my life financially, and they all involved partners or investing in something that did not align with everything. So if you're looking for a partner, look for a partner that has a different set of skills that complements your set of skills and make sure that they have the exact same core values and work ethic. All right. Because if they don't have the same core values, they don't have the same work ethic, eventually that is going to lead to a dysfunctional partnership. And it will be incredibly hard to get out of that. All right. That's my piece on partnerships. The next way to do this is you cannot go out and get a loan. Now, if it's an SBA approved franchise, you can get an SBA loan. That's going to be the cheapest and best route to go. It's also going to be the biggest pain in the ass, and it's also going to take the most amount of time and most documentation. The other way to do it is you could go out and get a term loan. We offer term loans and SBA loans, but a term loan, just so you guys know, only goes off of your credit and your provable income. So if you have 660 credit or better, and you can show that you made $50,000 or more, you might be able to get 50 to 100,000 over 3 to 5 years. And what that does is you're taking out a loan. It's not going to hurt your credit, and you have your savings to back it up, so you can build the business over time the way you want to, without outside feedback and without splitting any potential profits. Okay, that is, in my opinion, the best way, the way that I would do it if I was starting over today. All right, and that's important. If I was starting over today, that's exactly how I would do it, for all the reasons I mentioned. All right, just based on my past record, my track record, and what's gone on, just being open, that's how I would set it up. And then the other way to do it, if you don't go the loan route, is you go out and get a bunch of 0% credit cards and utilize those to build a business. That is true bootstrapping it. And there's nothing wrong with that. The only challenge that I have, the problem I have with it is when you take out all that debt on those credit cards, because we multiple cards, they typically give you that 0% for 12 to 18 months. And what happens is at the end of that, if you don't have it paid off, they'll back charge all that interest. So one, it's can be a ticking time bomb. And then two, because you're bringing on or utilizing all that credit on credit cards and not a long-term loan like a term loan, it will hurt your credit score because you have a lot of revolving debt. And I think one of the worst things that you can do when you're starting a business is start with poor credit and not have it set up the right way. Because once you're a year in and you need to go and get additional financing, maybe you need to buy a piece of equipment, maybe you just need a line of credit. Your credit isn't going to be in a position where you can do that. And only money you're going to be able to find is very, very expensive money. All right. These are all things to consider when you're thinking about starting up a business and how you get the money to start that business. A couple other things I want to mention when you're doing this. One, as soon as you get the idea and you know you want to do this, start saving, make sure your credit's in a great, great position, and open up the corp. Okay. Once you open up the corp, get the tax ID, go to Dun & Bradstreet, take care of the 5 fundability factors, which are really, really simple, right? You need a business email, a business phone number, a business address, business bank account, and a business website that has all that minus the bank account on it. Then you go with your tax ID, you start a DMB number or Dun & Bradstreet number, and you start applying for business credit so you build your business credit. And ideally, you want to put in as much work as possible and still draw a salary or work where you're working while you're getting these little things in place and maybe bring on a few clients, okay, before you make that switch over. All right, I hope this helped you. Please do me a favor. This is Financial Fitness Friday. Please like, comment, share. Get this to people that need to hear it because people make these mistakes all the time. And if we can save you energy, effort, money by just coming on here once a week, twice a week, and going through some things that'll really help you, that's what this is about. It's about giving back. So please share this with someone that needs it. And I appreciate you guys. I will see you on the next one.